Good evening, all. Thank you for joining in. So, today we have with us Mr. Suraj Kaeley, who was the ex group president of UTI AMC. He's a veteran leader who has over 25 years of experience in the mutual fund industry. Thank you, sir, for joining in. You can take over the session now.
Yeah, so am I audible?
Yes, you are audible and your screen is also visible.
Perfect. Yeah, yeah. So thank you very much, and first of all, a warm welcome to all the participants. Uh, you know, so as my title suggests here, it's titled "The Seven Habits of Highly Successful MFDs." And for some of you, if you have read, a book which was titled "The Seven Habits of Highly Successful People," I think this is something which will resonate with all of you because as mutual fund distributors I do believe that it is the habits that make the biggest of difference. So just to first give you a little bit perspective, here that this is not a theoretical kind of a title or a presentation. My son, he set up a mutual fund distribution business a few years back. And over the years, I think we saw that there were certain habits that really led to, him growing his business pretty well. So today he manages almost about 150 crores plus in assets. And but there was a time, the first 3 years, that it was a big struggle for him as well. So essentially, what we do on a day-to-day basis, I captured that entire process in a book titled "The Ultimate Client Acquisition System for Financial Advisors," and this presentation is actually based on that book. So I'm sure that all of you will find it very relevant, especially as you are trying to grow your businesses from your current levels. So the agenda is very simple. I'll take about 35, 40 minutes to go through it. Starts with a little bit of an introduction. So in the introduction, I basically would like to share, some of the assumptions or my thought process. So whenever I have built large businesses, I think this is the process that I really have followed. So what are the assumptions on which my, thoughts are based? I think that's what I'll take you through the introduction. Then we go through the seven habits in detail, and then of course there has to be an action plan for us to be able to implement all these learnings. So we conclude and discuss a little bit about the action plan. So at the end of the presentation, I'll open up for questions and we can take it up from there. So about myself, of course, Anshu has already shared with you about my background. But the only reason I share this slide is to, highlight that I'm not a trainer or a coach. Essentially, I have, created and built some large businesses in the country. So if you look at my experience over the last 3 decades, my last role was with UTI as the group president, sales and marketing. Before that, I've headed sales and marketing at Templeton, at Fidelity. And I also did a stint with insurance, MetLife Insurance, as the chief marketing officer. So essentially, I'm a practitioner, and the perspectives are very different of a practitioner. If you really are kind of coming from a training background, you're trying to handle all objections as if all feedback as objections, but in reality, that's not the case. So you should know that what objections are worth reacting to and which ones you ignore or tackle it very differently. So first of all, who is a successful MFD? Let's start with that. And essentially, if you look at our industry, currently we have about, okay, the number of ARN holders are over 450,000 in the industry. And we add about 4,000 to 5,000 MFDs every single month. So it's a very, very fast growing industry. So there are several people there. But interestingly, when you look at a number, like okay, how many of these distributors earn more than a crore or have 100 crore plus assets, you'll find that that number is only about 2,300. And of course, if you go down and add the sub brokers with NJ or Prudent, that number may add by another 400, 500 more. So roughly only about 3,000. So as you can see, there are less than 1% of individuals who really do a large business. So in my definition, I believe that when you look at these four parameters that I've mentioned here, I should also mention it is not or. You have to have all these parameters in place for you to say that your business is an exceptional business. So annual revenue of 1 crore, You have a sizable business, you manage at least 100 crore book. Most importantly, you continue to grow at a fast pace. So here I have taken a CAGR of 26%. And the reason I say 26% is that at this rate, you're able to grow your business 10x in 10 years. So if today you manage 25 crores, you can be 250 crores. And it is very clear that actually, as you grow, the same model will not apply. So today, for example, when I'm making this presentation to you, this can get you to, let's say, 500, 600 crores of assets. But after that, if you want to grow to 5,000 crores, 10x from there, you will have to build a team. You'll have to invest in people, set up different processes. The same model doesn't get you there. And more importantly, retaining clients also is a very important part. So if you're able to retain 95% clients every single year or 97%, in our case, there's no reason why we should be losing our clients, right? So to that extent, the retention ratios can be fairly large. So that is what is my definition of what is a successful MFD business or what's an exceptional business. So the habits that I'm talking about is really, trying to get you to that kind of a business level or that kind of a beat. So first of all, my assumptions, right? So when you look at an exceptional business, at the heart of it is that if you don't have clients, you don't have a business. And some of us or many of us, get stuck and build a mediocre business because our clients are low value clients. So if you want to build an exceptional business, you have to understand who are your high value clients, and only if you are able to acquire them, you build an exceptional business. So here, when I say high value, uh, it's not about individuals who give you the largest tickets. It's about individuals where you add the biggest value, right? Because only if you add great value, they will do give you big business. So even if you have a large value ticket client, but you're not giving much value, that client will go away at some point in time. So that is a very key distinction I want to make when I talk about high value clients. And the good part is I'll give you specific examples, right? So you'll be able to relate what I mean by a high value client. The second part really relates to is your own habits or your own skill set, right? So you want to get exceptional clients, but your ability or skill to identify, acquire, service, and nurture your high value clients create an exceptional business. And here I want to highlight one simple part, that skills are not built overnight. So if some of you are starting your business or have just been in the business for 3 4 years, you still have a long way to go in terms of building your skills. And there are many skills which are important. So in today's section, I'm going to discuss the skills related to business development. How do we get clients? How do we acquire clients? How do we retain them? But obviously, there are skills related to investments, which are very important. There are skills related to, how do you navigate the current times, which are very volatile. Once a decade, we get a situation where, we have to face some extremely tough times. So how do you navigate that period becomes fairly important. And so that is something which, I always keep sharing that this is, so going to talk today about the skills from a business development perspective. So what should be your goal? So when you acquire a client, and this is again very important, that because client acquisition is very difficult, I always believe that to build an exceptional business, you must always think about lifetime value of your clients. So look at your entire client book today, and if you're just looking at their current business, you're doing injustice to yourself, because a lot of business can come in the future. And obviously, what is left on the table by most of us is referrals. So many a times, we are successful in getting some part of the future business, but we leave referrals on the desk, and that I don't think so is a good idea. So your goal should always be to, maximize the lifetime value. And interestingly, there's one single component which, leads to, that lifetime value, is basically continuous engagement. And I will really define what engagement is. And so it becomes very clear that what I mean by it. So just to give one quick example, many of us would be sending, let's say, Diwali greetings, right? But I don't count that as engagement, because only a response that is received from the client is, called as engagement. So in my dictionary, the definition of engagement is not what we do to our clients, but what our clients do to us. So that's very, very important. So how do clients typically buy? Because that is again a very important part, and I'm sure as I take you through this model, you will realize that, yeah, I've been through these situations. So whenever clients are buying. So like for example, we get a prospect, and when we go and meet the prospect, or we are trying to set up a meeting, in client's mind, first they try to figure out that do I really like this person and the company, right? Because if they don't like you, or they don't like your company, they will not even talk about the product or service. So just to give you my personal example, when my son set up the business, he felt that dad had a lot of big clients and he can introduce me to them, and I did take him to one of them. And but obviously when the conversation went down saying, hey, who's in your who all are there in your office, where is your office, and he said, look, I work alone and I work from home, there was no discussion about product or service. So many times the clients don't talk to you because they ab initio they have not liked you or your company. So only when they like, trust, respect, and believe you, and they also like, trust, respect, and believe your company, you get a conversation going in terms of what is the value you plan to add. So this is where the product service comes in. And typically, when you present your product or service, they ask two questions. One is, will this work, or will this work for me? So just to give an example here, that today, if I tell you that you want to do an SIP, which kind of funds should I buy in? And interestingly, I did a study on that subject, and I found that you take any 10-year period and you look at the same fund house, large cap fund and a small cap fund, you found that the small cap SIP beat the large cap SIP every single time. And the minimum outperformance was about 3.5%, and the maximum that I saw was about 10%. So same fund house, comparison of an SIP in their small cap vis-a-vis large cap. So obviously, when I present this kind of data, you will be thinking, yeah, what Suraj is saying makes sense, but maybe it works, but maybe it doesn't work for me, because today if I were to buy small caps, and small caps are very expensive, and we know that markets are on a downturn at the moment because of the Iran war, uh, you know, maybe my clients will lose more if they start with a small cap. So it's better to give a large cap or a multi-asset. So the purpose of giving this example is to just share with you that only when they cross this hurdle, where they have listened to your product or service, and that they believe that it will work for them, they really talk about pricing, whether they should do it with you, their bank, or another distributor, or go direct. Those questions come in. But the reality is that whenever client asks you that question, that hey, how much do you charge, or something like that, that they have liked you, they have liked your company, they also like the product or service that you're offering. And after this, many times they'll say, okay, let's start, and the sale doesn't happen. And the reason is that clients actually revisit that whole story before they write a check. So this is the model I believe in, that this is how I believe customers really work, and they don't have any great deadline in mind. So sometimes you have to be very patient even after the client has said yes. So once you have got the sale, we try to deepen our relationship. And generally, to deepen our relationship, we either upsell or cross sell. So in my model, I believe that upselling is easier, cross selling is very difficult. And cross selling you must do only after you have acquired a particular size. So just to give an example, that let's assume there's a tea vendor who's really selling great quality tea, and now if he or she were to add coffee as one of the offerings, we know from experience that tea drinkers are generally not coffee drinkers. The common set of people who drink tea and coffee is very, very small. So what cross-selling does typically is it helps you get new clients or a new segment, right? And hence it is a little bit more difficult, because the way you pitch to that new segment also differs quite a bit. And then after that, we build our referrals. And in my definition, there are two kinds of referrals: passive and active. Passive is when clients come on their own and give you a referral. Active is, when you ask for a referral and you get it. So as you can observe, active referral is a skill, passive is luck, right? So if you're lucky, you may just get some clients through referrals. But if you genuinely want to build your business, you have to master this technique of getting active referrals. So that's the model that we have. So the question is, why are we going through all this, right? And the reason for that is that actually, if you want to grow your business 10x, right? So the above the green line here is that 10x model. You're growing at 26%. You will not notice any difference in the coming 2-3 years. It's those habits that you form, right? You don't know whether they are taking you to a 15% growth, or you're actually losing your business, or actually you're growing. You'll come to know only much later, right? So your current business growing 10x from now or 4x from now, you will never know whether you're which track you're on. But interestingly, if you want to get to this higher level of growth, behavior changes will predict results. So if I observe your behaviors, I discuss about your behaviors, it's very easy for me to predict, whether you will, which line you actually are on, and what is the chance that you'll be able to grow your business substantially. So the whole idea about this presentation is about those behavior changes, and hence, I title them the 7 habits that are very, very important that you need to reflect on. So why focus on habits? Because habits are under your control. You're the master. They're observable. So I don't know what's going on in your mind. So today, as I speak, I don't know how many of you are actually listening to me as well or not. But leave alone that. Even if I was doing face to face, what's going in your mind, I will never be able to make out. But I can observe your habits. So for example, if I ask you a question that okay, how much time do you spend on prospecting every month or every week? And then you give me a number, I know that that behavior, if you're doing prospecting, chances are you'll get clients. So there are many such questions that one can ask and figure out whether we are on the right track or not. So if you want to be successful, all you need to figure out is that okay, there are MFDs who have been very successful. So what are the habits do they have? And because it's an habit, it's something that they do on a daily basis, right? So it is not something that you do occasionally. A habit is something that you do on a repetitive basis. So if they are living their life in a particular way, those habits, if you are aware of, you will also be very, very successful. So what are the assumptions again here? That so I do believe that all of you are very ambitious and want to make it big. So you have a growth mindset, which is basically a willingness to learn and change. And so my simple tip for getting motivation on is that write down your current revenue. So today, if you're, let's say, at 10 crores of assets and you're making 10 lakhs, multiply it by 10x. So just imagine that if you can grow your revenue by 10x, what a difference it makes to your life. So today, if you're at 25 lakhs annual revenue, if you're earning 2.5 crores, what will it make as a difference? And the question you have to ask is that, do I really want it? So in our industry, I've also observed that many MFDs, once they reach 50, 100 crores, they're so happy that they really are not trying to, grow their businesses. They're very happy with the current cash flow, and they really are not trying to invest more time and effort in the business to expand it. Now, I cannot be helpful to such individuals. So my belief is that you're ambitious and you're wanting to grow. So now let's come to the main topic, which is the 7 habits. I've given you a context in which these habits have been built. And as I go through it, I'm sure you will see that all these are very practical and can make a big difference to your life. So the first habit, which I really talk about is start with client retention, right? So why client retention? That basically my view is that if you're getting clients, but you're losing the existing ones, then your assets, your revenue will never really grow. So it's like adding water to a leaking bucket. So I have this famous saying, which I always used to tell my team, that current clients are gold, potential are silver, right? In actual life, we do exactly the opposite. We treat potential as gold and current as silver. So once you get a client, we just forget them. Now, if you want to be successful there, you must define and track your service deliverables, right? So the pro tip. So how do you implement this habit? Start your day thinking about your current clients, and is there anything that you need to do to ensure that you do not lose them? So now this is the question which I had asked my son. That it's like we know that it's a reality कि जिसका जन्म हुआ है उसकी मृत्यु निश्चित है. So whoever is born will die. So in our business, if somebody has invested with you, right, they will redeem one day and go away. That's the reality. Now the question is, when they go away and you're asking them questions that why did you redeem? So what answers you would not like to hear? So now when I posed this question to several MFDs, one of the feedbacks I got is that, look, I don't want to hear from my client that I was not in touch, right? So now it's a very simple thing that if you believe that just staying in touch is a very, very important component in terms of client retention as well, what you do is you take that one step ahead and say, okay, what I will do is I will really track each of the individual clients that I have I really stayed in touch with them. So like this, what we do at our firm, which is called Altium, is that at the start of the month, we add a column and we color all the cells red. And once we get in touch with the client, we just color the cell green, and then we write the date when the last contact happened. Now, interestingly, here it is not about what we do to them. For example, we send a monthly account statement to everyone. Now, that we don't count as engagement and say, oh, we have sent to everyone, so it's green. Only if there's a response to that, whatever information we have sent, or there's a call from a client, we track it and say, okay, now we know the engagement is for sure. Then only we color the cell green, and then we write the date when was the last conversation happened. So now you can imagine that if every month with every client you are in that green zone, right? There's an engagement that is happening. At least the client will never tell you when they redeem and go away that look, this guy was not in touch, because you have actually tracked that deliverable. So whatever your deliverable is, whatever comes to your mind, which is very important, just capture that. Which you think that is very, very important from your business perspective, from client retention perspective. You should really capture it and really track it on a regular basis. The second habit is, when you're meeting a client, right, you really want to be thinking not in terms of just the current business, but in terms of what is the future potential and referrals. So I call this the lifetime value. In fact, lifetime value's definition is about what is the value you derive from the current business, future business, and referrals. So many clients, they start small, but then they grow very large over time. And if you really want to, get that business, you will have to stay in touch with them. But first, you should, be thinking that yes, I really want to ensure that this client, when they do future investment, they should do it through us. Now, interestingly, the client, whatever business they have, they can give us, tons of referrals, right? So my view has been that actually a client can easily give you 10 referrals. So I do believe that referral value can be 10x or more of what you earn from the client. And this is very, very important. Only when you start getting this referral value, that is the time you really, start growing your business. So don't just focus on the current deal size. You're leaving a lot of the business on the table. You should be maximizing your LTV. So one of the things which I keep telling is that, so when you're meeting a client, think about it, that what is the business potential that you can derive, right? And you really focus on that. So many times the client will tell you, for example, I've got many properties, but today I'm just investing a small SIP and starting. Now we know that from experience that those properties one day can have the potential to get liquidated. And if that money comes through, this business can grow very large. Similarly, there will be a lot of individuals who may never do business with you, but can provide you with tons of referrals, right? So that also is important. So many times there's no business from the client, but they have the ability to give us a lot of referrals. I call them ambassadors, right? So that's the reason I say that whenever you're meeting anyone, don't think just in terms of what business you can get now, but what you can really build in the future. That's very, very important. So, so obviously understanding your clients is very, very important. So in my dictionary, I try to segregate all clients in terms of their potential value in the future. So what can I build from them in terms of the future value plus referrals over the next 3 to 5 years? And if the number is large, I classify them as A plus. And if the number is very minuscule, I call them Z. So Z are guys who don't want to do business with actually. So if you look at in terms of how we define it, so great and good clients are where you benefit the most from what you have to offer. They buy regularly, they buy profitable products, buy large volume, and they give you respect and treat you like a expert. And similarly, if they don't treat you, they treat you like a vendor. There's no mutual respect. They don't buy too much. We call them as not so good clients and classify them as C or Z. Now, the distinction between C and Z is important. C is where you believe at least there's some minimum business value that I can derive, which is worth working with the client. Z is when you want to entirely give up. And it's very important that if you want to get your true value, you have to learn to wean away your small clients, because finally time is very limited. Until you learn how to wean away those clients, you will never grow. So the reason these clients come through is because when we start our business, anybody who gives us money, we think is a client. But that's not true in the long run. So focus on clients that matter. So I will, you know, we do a very quick, I'll give you a quick example. So this will be very clear. So the only point I want to highlight here is that not everyone is your client. So what, I feel when I'm discussing the next slide, I want you to step in and think that you're a retirement specialist. That means that you can help people with their retirement plans. So let's say you're a retirement planner. Now, if you're a retirement planner and I ask you this question, that who is your ideal client, right? Is it a senior private sector executive? So just to give an example, that I live in Bombay, so I always give examples from here. That let's assume this person is the vice president of marketing with Colgate and works in Powai, 52 years old, right? And obviously, being a vice president of marketing, he's doing pretty well, earning well. So this is one example of a client. So I can give you any of these kind of variety as a lead. So let's assume I've got one lead in each of the segment, and you are a retirement specialist. Which is that lead that you will seek? That's the question I'm asking here. Similarly, let's assume there's another person who's a senior public sector executive. And so I give this example here. Let's assume he's working as an executive director with HPCL. And so obviously, the only difference between the first guy and the second one is that this person has a pensionable job. The third example is let's assume a leading cardiologist in your area. And fourth is, let's say, a small restaurant owner, a business owner. Now, if you're a retirement specialist and somebody were to offer you leads across these segments, which one would you go after? Right now, in the interest of time, of course, I'll not take feedback today on this, but I'll give you, just my, experience about dealing with these segments. So the senior private sector executive. So when you talk about, if I gave you this idea that the person is from Bombay, lives in Powai, right? So typical household expenditure will be about 2 lakhs a month if you are that profile. And to generate 2 lakhs per month, you need a corpus of about 5 crores. That's the least you'll require. So 5 crores, chances are that 1 or 2 crores can get invested through you. So let's assume that there's a potential of this guy investing about 2 crores through you. And if you're making 1%, you're making 2 lakhs from this client every month, every year. Now, I also talked about lifetime value. So it means that if you get this client, he can give you similar clients. And the potential value of this person is actually, in terms of revenue, is about 20 lakhs. So it's per annum, right? So it is a very, very substantial value that this person has. Now, let's take the second example of a public sector executive. My experience has been that if you have a pension, then you don't take interest in investing, you don't save, your corpus becomes very low. And because your corpus is very low and you don't understand investing, you tend to really go for very, what you call fixed income products. So today, for example, such a person would want to buy the Pradhan Mantri Vay Vajna Yojana, right, which is a 10-year annuity product from the government, sold by LIC, and the commission is only about 0.1% there. So now just imagine this person may write with you about 20, 30 lakhs, and you would make only about 0.1%, right? So, which is very, very low. So then again, the lifetime value will be very low of this person. If you were to meet doctors, so doctors are brilliant clients. But the problem is that when you tell them I'm a retirement specialist, the first response will be, hey, I'm not going to retire. In fact, I'll make money only when I get old. So your whole story goes for a toss, right? So if you are going after doctors, you need a different pitch. The same pitch of retirement will not work. And similarly, when you look at small business owners, not only they will never retire, but they will also say that, look, do you have any product that gives returns which are better than my business? And they will always treat you like a vendor. So as I can share with you that if you think that, oh, everybody is my client, the answer is not that. If you're a retirement specialist, chances are a senior private sector executive is your ideal client. And that is what you want to focus your energies on. So always I highlight that if you're building your business, which segment you think you will do the best and why you will do the best, that should be very clear. And ideally, you should be getting clients in that particular segment. So that is what you need to keep in mind. The second factor I do about, okay, when you choose a client, I use this 80-20 principle. It's called the Pareto principle. And typically what it says is that 20% of clients give us 80% of the business. So what I've done is I've done again a 80-20 split of this 20%. So what you will find is that when you list down your top 4% of clients will give you 64% of the business. Interestingly, when you do for the bottom 80%, you will come to a conclusion that 64% of clients are only give you 4% of value. So which means that even if you were to lose some of them, it will not impact your business. And only when you give up on these clients, you will be free to serve the bigger ones. And that's why I say that Z categorization is very, very important. So I do believe that when you're thinking of your clients, you have to be clear about which segment and what size. And that is how really you should be going about building your business. So the habit that, okay, every time I meet someone, I will ensure that I'll give in my mind, I'll give an assessment that where will this client be with me in the next 3 years. If the answer is that it will be very large, they can be A plus, but if they're very small, you should give up right there, not really try to convert and waste your time in that segment. The fourth habit is really asking for referrals. right? And so the single source of growth for our business is really referrals, and the reason for that is very simple. I shared with you the model, right? That people, when they want to buy, they always will try to figure out about you and your company. So the trust level is instant when it comes through a referral, right? So, and asking for referrals and getting them is a skill, and so you must figure out a referral method that works for you. And the whole idea should be that you must be aggressive about how many referrals you want, and you should be aiming for at least one referral per client per year, right? I'll repeat, one referral per client per year is what you should be aiming for. It's not that I got some few referrals today and I've done well. So if you have 30, 40 clients, and as I mentioned, when I count clients, I'm not counting the Z clients, right? So when you do that, and if you are able to get to this number, you can consider that you are proficient in getting referrals. So you should track the referrals you receive from your clients, and how many did you get from them, each one of them this year, and how many have you received since they became your clients. You should be tracking that. So many a times when I've told people that look, referral is important, they have come back to me that, sir, I go and ask for referrals and I don't get it. Happened with my son as well. So we've really mastered a technique which I'm sharing today with you, which is called the active referral technique. And because I said it's a skill set, our goal is to get one referral per client per year. So in reality, what you'll experience is that 50% of clients will still not give you a referral, but the 50% who give may give you more than one. So your average of one can easily happen. Now, obviously, to get referrals, there are certain preconditions that have to be met. Nobody just gives you a referral just like that. The first thing is clients should be happy with your services, because if they're not happy, they're not going to be giving you business. Second is you should be in regular touch with them. And third, you need to specifically ask. So what we found was that there are different places and different times that you can ask. But I do recommend that if you're very serious about referrals, you should set up a separate meeting, to meet your client, and where the topic is only to discuss referrals. Now, obviously, when you ask for such a meeting, nobody's going to give you. So all you say, tell to the client is that, look, I want to meet you for the next 50, whenever you have time, I want to meet you for about 15, 20 minutes. And when the person asks you for the agenda, you say, look, when I meet you, I will tell you what the agenda is. So you don't disclose the agenda. And when you reach there, you use this particular script that I've shared. And so what I've underlined here, you cannot really change that. Rest, whatever you want to mention, you can do that. So I'll just read out the script, just to make it very clear. So you start your conversation by saying, I need your help. So the reason you say, I need your help is very simple, that when you say that I need your help, the person has to be very attentive, because how will they help you? Second, they also like, when people say, oh, I can actually help someone. So you always start here. The second line is that, as you know, our business is a trust business, and hence I never approach strangers. I rely entirely on referrals from my existing clients for growing my business. So, in other words, if I don't get a referral, my business does not grow. So that becomes very clear. And then you don't use the word referrals. You say, I'd be delighted if you could introduce me to a couple of friends or colleagues who you think can potentially benefit from our work, from my work. And if it's okay, I will send you a short draft that you can use for introduction. And thank you so much. So as you can see here, that all the lines which I put here, the first line is, I need your help. Second is, I don't get any, there's no other source for me to grow. It's only through referrals. The third line is about, okay, I need introductions, right? And the reason I use the word introduction is because if the client doesn't convert or the prospect doesn't convert, the person should not feel bad. And then I'll give you a short draft, right? So that it makes life very easy. So today, when we are getting our clients, these are the fifth or sixth generation of referrals. So referral ka referral ka referral ka referral, right? Because time has gone by, and because we only source through referrals, the business has done extremely well for that reason. But it takes a lot of time to master the script. So my request to you is that you can use the script, but if you have any other way which works better, please use that. But the question is very simple, that you have to get at least one referral per client per year. And the draft for introduction also I've given here. So it's also there in my book, that, hello, I've known this person for the last several years, and he has been helping with my investments. And I felt you two could benefit from the services. So why don't both of you meet and explore areas of mutual interest? So it's a very simple liner. It's not going, too verbose, or he's a great guy, I produced a 25% return with him, he's just fantastic. We're not giving any such gyan. We're just saying that, okay, he helps me with our investments. and you can also meet and consider working with this guy. So now, even if you get referrals, we find from experience that actually conversions are very slow. So there is a lot of research which shows that you have to keep in touch with clients throughout, right? So if you give up on prospects too early, you will lose them. So in relationship selling, you build a strong relationship with the prospect over time by delivering value in advance and building trust. So as you can see here, that the research shows that 50% of salespeople give up after they hear the first no. 80% give up after the third one. But interestingly, if you survive the 7 or 8 no's, one thing you are guaranteeing yourself is that whenever the conversion happens, it will be in your favor because you're now top of mind. And the trick is, how do you stay engaged? So, first of all, from a habit perspective, just because somebody has said no today does not mean it's a no forever. It's a not now. That's the way we position it. Maybe in the future, this person can really work. So one assessment I always tell all MFDs to do is that if you're convinced that if you get this person as a client, it will make a difference to your business, then you have to stay in touch throughout. And so somebody had asked me that how much time should I stay in touch? And my answer is that till you convert the client or the person dies, right? So you never give up on such person. That's very, very important because if they come to you, it can make a big difference to your business. So again, this research I was talking about that, so what you will find is that the initial conversion is only about 3%, but then there are, three buckets of 30% each who have said no. Maybe there's another 7% who would buy a little later, but you can see that 1 in 3 will always convert, right? Now, the reality is that the sad part is rather that we don't know who's that person who's right, and hence you have to keep in touch with every one of them, right? So, and the reasons are very obvious that maybe 1/3 of them are happy with the current provider. Somebody just doesn't need the product. So they may have everything right, but they just don't want to be, investing in mutual funds. And there are several such individuals. So you can't really convert them. Maybe they have a great bias towards property. So they'll continue to buy into property, or they have great bias towards fixed income. So whatever you say about inflation, it will never really ring to them. They say, no, I'm happy with my low returns. I don't mind getting killed in the long run through inflation because equities will kill me instantly, right? So that's their thinking process. So that's how conversions really work. So obviously, if you really want to succeed, you have to stay engaged, and without a CRM system, it's not easy. And again, when I'm talking of engagement, we have to engage not only with clients but also with prospects and ambassadors. So the whole idea should be, so I created this concept called the engagement index, where I say that from every client, prospect, and ambassador, you must get at least one response every single month, right? And that's very, very important. So it's a pretty tall ask. Sometimes it may look, but as you start doing it, it becomes easier and easier. And as you do that, your business really starts to grow very rapidly. So the question is, how do we stay engaged? What is it that we can do differently, to stay engaged? So obviously, when we are calling our clients, I have observed that all of us, all the calls that we are doing can be categorized either as relationship calls or value added calls or the sales nudge, right? So what are examples of this? So relationship calls are like when you're wishing a birthday or wishing for any festival, but the idea is not for sales, not the idea is to spend time. There's no expectation of sale at the end. So those are examples of relationship calls. Value added calls are where you're trying to address a specific problem, or maybe you're educating them. So today, if you're calling somebody for an SIF, that can be an education. So that can be a value added call. Exceptional service. So sometimes, there's a transmission case, for example, and you helped out, or they had some old share certificate which nobody could transfer, but you helped them transfer in their name. So all these are great examples of service and value additions, or you can give them a referral too, or a small personal favor. So as you can see, the sales nudge should be very minimal. So you can't be asking clients all the time for business. And whenever you ask for a sale, you should be very specific on what you're asking for. So this kind of an engagement strategy is important. So which means that you have to get 12, engagements in a year. And if you get one or two in a month, then that is counted only as one engagement. So every single month you have to build this habit where the clients gets used to responding to you. And the reason we do that is that as they respond, you will see that in the future, when they have a business or a referral, that will also come to you. That's why this habit becomes very, very important. The last habit, yes, is the last, but it's not the least, that most of us, do not spend enough time with clients, right? So obviously, when you look at your whole day, We have to travel, lunch, everything is there, but that doesn't produce sales. That's why the signal shows red here. You're doing servicing, training, like you're listening to me today. That's not going to produce sales either. But you have to use this information and then talk to clients, right? So only the face time with clients produces results. So my view is very simple that when I've asked this question again to MFDs, how many people do they meet in a week, right? And when I say meeting, it's a meaningful conversation with them, right? 5 to 10 minutes or even more. But such meetings are generally 4 to 6 for most MFDs. They don't have really a pattern. And you must try to do about 12 to 16 meetings per week, because that simple, doubling or tripling of your effort in the right direction can increase your output very, very significantly. So just to do the conclusion, I think we're fairly on time, but again, an important section here that the whole idea is that I've talked about behaviors, and if you want to implement, you'll have to do something like this. Take one of the habits which you want to build today and which will create the biggest impact for you, and then say that, okay, I was doing this, now I'll be doing this, going forward. So what is the difference? So just to give you some examples, I never, I gave little time to clients who truly matter. So that's your current behavior. So the other way to put this is I spend, my time with all the clients. I don't really segment them in any manner. But going forward, I will ensure that all my relationships are classified and I'll spend more time with my A plus and A clients. Similarly, from a behavior standpoint, I was doing 6 meetings a week. Now I'll do 12. So, these are the kind of examples if you can do for yourself, you'll do very well. So one of the things which works when you make a behavior change is to have a buddy. So the buddy can be a spouse, it could be another MFD, it could be an AMC salesperson, anyone. It could be maybe even somebody from NGEN, where you talk to them and say that, look, I am trying to make this change and I will report to you, on a regular basis that whether I'm making that change. And only when you have an accountability built in, you will see that those behavior changes will happen. Otherwise, they will just remain, as it is as you go ahead. So just to give you some examples of very successful salespeople, and all the habits which I've talked about, they are not original habits. These are habits which people have followed in the past and they were very successful. Hence, we try to implement in our business as well. So Joe Girard, is known as the best salesman in the world ever has produced. He's in the Guinness Books of World Records. And look at his success. He sold in 15 years of his business there 13,000 cars, and best day sales were 18 cars in one single day and one car at a time. And best month of 174 cars and best year of 1,425 cars. Absolutely crazy. The results he got. And Chevrolet is not the best of cars, by the way, right? So he was a salesman at a Chevrolet dealership. And so when you ask him why he was so successful, he said, I'm so organized, it's sickening. And that's why I believe that organizing yourself becomes very, very important. He says, I never sold a car in my life. I sold Joe Girard, right? So people buy people. So you must realize that in our business, you are the differentiator and not the products that we offer. All products can be the same, but what people go through in terms of experience is really the differentiator, and you bring that differentiation. And what was his formula? His formula was that he would send a card to his client every month, which read on the outside, I like you. And inside, he will say Happy New Year in January, February, Happy Valentine's Day, so on and so forth. And in August, he would say, Send me a client and I'll give you $50. Interestingly, his cards were always handwritten and signed by him. And then he mentions in his book that, when he retired, he was sending 29,000 cards every single month, all signed by him. In fact, he had a team of 2, 3 people to, just pack those cards, but he would sign each one of them himself. And they were always handwritten. And because cards would get lost, if you do the same style, so they were always different colors, shapes. So when I talked about my engagement, right, that every month you should do it, I actually took it from Joe Girard. And as we implemented this, we realized our business just went through the roof. That one single change of staying every month in touch with every client or a prospect or an ambassador, changed our whole life. And this was borrowed actually from Joe Girard. Similarly, if you look at insurance, we talk about the MDRT, the Million Dollar Roundtable. Look at, Mehdi. Mehdi, did $1 million policy in 1960, right? So now you inflation adjust it and you can see what his numbers were. And this guy is an Iranian. And today, you know how America and Iran are in love. Just imagine an Iranian lawyer, going into US, doesn't even know how to talk English and still becomes the best salesperson insurance industry has ever seen, right? So that's his track record. And again, if you ask Mehdi Fakhrizadeh, he also says the same thing. that he summarizes his success in just two words: service and habits. He knows that service given to others will eventually lead to success, and great habits produce great sales. So, in the success system, he explains how to perform inward personal analysis and migrate from your poor habits to great ones through simple guided introspection, a simple checklist, and daily attention to desired results, right? So, that word daily is very important. So again, if you think that there is some magic wand that you can get to get your business going, the answer is no. The answer is with you in your own behaviors and your own habits, and whatever behavior changes that you want to bring in. If you can really, I've talked about the 7 habits which I've observed. Some of the most successful MFDs do it. I think that can be a great start. So I will stop here. And in fact, if any one of you is interested in buying my book, it is available on Amazon, and you have a QR code here as well. So I'll stop here and then maybe I'll open up for questions. So you can put your questions in the chat box, or you can even, you know, one second. Yeah. So Rajashekar is said, what is no quid pro quo in relationship call? So let me give you an example. So quid pro quo means that if I do something to you, you do something in return for me. So for example, many a times, we have this idea that, okay, let's call somebody on a birthday of their kid's birthday. And when you wish the birthday, right, you say that, okay, hey, why don't you start an SIP for your child? Oh, that's a quid pro quo. That actually you're asking for a return gift. That, look, I wished you on a birthday and now I want business from you, right? So that's a quid pro quo. So then that becomes a sales nudge. It is not a relationship call. So relationship call is just a casual call. So for example, in COVID times, if you call somebody and say, hey, how's your health? Or you found that somebody was traveling and this war has broken out, and you call and say, hey, I hope everything is fine. And how was your trip? I hope you had a safe trip back. So those are examples of relationship calls. How we will be able to get this PPT? So Anshu, any suggestions on how we can share the PPT? So, okay, I can give you one simple way. So, no headache for everyone. One second, I'll just share with you. One second. So, in case you want the PPT, all you do is maybe you have my contact number 9967054816. You can just WhatsApp me saying that you are on the NGEN call, and I'll have the PPT sent to you on WhatsApp. I'll forward it to you. So I'll repeat my number. It's 9967054816. Or you can even email me at sk@surajkaeley.com. Yeah. So Umesh has a question. Sometimes prospect ask if we have a minimum relationship size that we look at. How does one handle this without being rude, underplaying the relationship size? So, well, people ask us that question. So we also go ahead and say that, look, we don't have any particular number in mind. And that's how we do it. But then, of course, it's your assessment. If you find that the business size is not too much, the way you win out client is that you are not reaching out to them, right? You let them call you, but whenever they call you, service them well. But yeah, I think it's very rude to say that, okay, I do only with minimum 25 lakhs or 50 lakhs. So generally now, for example, in our case, we do a lot of retirement business. So we tell them that because we do a lot of retirement oriented business, people do have a decent size to generate their regular income. But yeah, that's not really required. Today, if you don't have enough money, you want to save and grow bigger, we can be helpful for that too. Will this be uploadable on YouTube? Uh, I'm not sure what you mean, Yash, by it. At least I'm not on YouTube, and I don't want this to be shared on YouTube either. It's meant for you to use it, not for a generic, purpose. Yeah. Any other questions? So my system has decided that I can't share my video. So I'm sorry about it. I click it, it just goes away. But anyway, that's a problem on Zoom I face sometimes. Yeah. But any other questions? Anyone? Did I miss any or?
S- we have a question on chat box, sir.
Yeah, so I just saw. So how will be able to get the PPT? Sometimes prospects. I answered that. So Parth, then if you were starting today, do friends and family actually give meaning business? Parth, that's a wonderful question. Friends and families don't give meaningful business. In fact, they'll be the biggest source of disappointment for you. And the reason for that is that, see, everybody will do business when they see benefit for themselves. And as I mentioned, not everybody derives the same value from your services. So what you need to do here is be clear that uh, if they fit the TG, then the answer is yes. But if they don't, then they can be great source for referrals and introductions. So don't use friends and family just for their business. If some of them qualify, that's good. But otherwise, ask for referrals and introductions. That is where they can be very, very helpful. My question is, sir, whenever I go for meeting to take investment from the client, after meeting client said currently is funds, so is the situation. After meeting said currently is fund, so is the situation. So I didn't get this question. So if I'm understanding it right, uh, people may say that I'm not considering a investment today, something like that. So they will consider it later. No, so obviously, clients need a very strong reason to move, and obviously it's like this. So when you're making a sales pitch, for example, there are two parts of a sales pitch. One is where do you invest, right? And second is from where should you be getting your money out, right? So just to give an example, that today there are a lot of SIFs in the market, which so one of the category of SIF is which invests in beyond the 100 companies. So essentially, this is a mid and small cap SIF. Now, in an SIF, you can take 25% short positions. So obviously, if you're making investment or a pitch to a client, you say that look, small and mid cap can be very volatile. But if you do in an SIF, part of the portion, is goes to shorter stock, and they benefit when the markets go down. So the volatility that comes with small and mid cap can also go down if you look at an SIF. So I'm just giving a rough pitch. The idea here is to highlight that you need a complete pitch for somebody to really consider seriously, because many clients don't know which portion of which part of the portfolio should they redeem to invest with you, right? So that's also is an equally an important part to highlight. You don't talk about just the idea today and just ask for investments. So that is the way we really look at. I hope I answered that question. Yeah. But yeah, it's very normal behavior for clients not to invest right away, right? So as I mentioned, only 3% convert. You have to be patient. Any other questions? If just one more. Can we use a feedback form as reference? Well, that's a little weak, Deep, to use. I think people will not react much when you ask for feedback forms. So generally, I told you that people should be happy. So the way we ask that question is that, hey, we have been serving you for last 6 months or 1 year. Is there anything else that you'd like us to do? So that really helps us to do that. Any template to do the self introduction, key points, I mean, well, the I don't think so. That's the way we look at the business. I think it is the reverse. I do believe that when you're talking to clients, you want to build a deeper understanding from them. And rather than saying, talking about yourself and saying that, oh, I've done the following. So just to give you my own example, I'm a CFP. My son, for example, is also a CFA, but we never start our pitch by saying, oh, we are a CFP or a CFA and been in the business for last 30 years. We don't do that. So the whole idea is we have a conversation, and then how we can add value. That's what we are spending more time on than telling them about our backgrounds and how large we are. So we actually feel that that doesn't work in the business. So the more, I think this is one unique business where if you understate yourself, you do far better than actually trying to say that you are fantastic. But I'll just add to that. If you want to really make a sharp pitch about yourself, I do believe that you should use AI a little bit. So if you just upload your CV to Chat GPT and say, "Hey, I'm a financial distributor or a mutual fund distributor based out of Mumbai or wherever in India," and so here's my CV. Can you help me draft a two-line introduction, that creates an impact on the client, and see what outcome you get, and see if you like it. Deep, I will send you after the call. So I'm on the call, so that's why I can't really send you the PPT. Once I'm through the call, I'll have it sent by end of day. So I always tell people that when you write to me, you be a little patient, because sometimes when you're busy, you may not respond, but you will always get a response eventually. So that you don't worry. So just write your name as well, so it's easier for me to then store and then send you the PPT. Any other questions? So great. So if there are no other questions, then I'll let somebody from NGEN, conclude the call.
Thank you, sir, for your insight. So our CEO has been unmute. Yeah, sir, over to you.
Yeah, yeah. So thank you so much
Hi,
for
Devrat. Hi.
taking out time and giving this wonderful presentation. Uh, Thank you everyone who participated in this webinar. Thank you so, sir, for your wonderful insights. I keep learning from your kind of experience that you keep sharing, not only through webinar but also coming to our office.
Yes.
So thank you once again, sir. Meet you soon. I need to talk and discuss certain things.
Sure, sure.
Yeah.
Surely.
Okay. Thank
Yeah.
you so much,
Thank
sir,
you very
once
much.
again.
All the
Yeah.
best. Yeah.
Thank you
Yeah.
so much. Thanks.
Yeah.
Thanks.